Hello, this is David Crowell, and I'm from Mortgage Network, and this is Money Matters. This segment I'm going to devote to our local housing market and the impact on the local housing market by the broader economic trends in the country. Every once in a while, I like to focus on the local housing market simply because it is such a major driver of our economy here, and it is perhaps the single piece that is most interconnected to the broader national economy. And it's kind of hard to link Hilton Head to what's going on in the German Parliament today, or to directly link Hilton Head to what's going on in China today. But it's pretty easy to link Hilton Head to the Federal Reserve and the most recent increase in interest rates to now 5% as the Federal Reserve's base rate expressed as short-term bank rates. The base rate for the Federal Reserve is 2%, and our local banks and short-term mortgages are all 3% higher than that, and are now at 5%. Our long-term interest rates are now at 4.75%, hovering between 4.6 and 4.7, and showing every indication that if there is the slightest additional pressure, that the interest rates will go up some more. The long-term interest rates will go up some more. The housing market, the local housing market, breaks into two big pieces here. And you'll identify, anyone who's watching, you'll identify with which of the two pieces you fit into. There's a very, very active $100,000 all the way up to $600,000 or $700,000 market for people who are in the area or moving into the area as primary residents, as people who want to live here. If you're younger and probably buying in the lower end of that, you're coming here to work, or you've grown up here and you're intending to stay here and work. It's very interesting that all of the housing for that group of residents, of primary residents, is still very affordable. How can rates have gone up to 4.75% from 3.75% last summer, and the housing market hardly notice? How can I say, gee, everything remains very affordable? Well, that's really for two reasons. And remember, I'm talking about the half of the housing market that really is populated by primary residents. The reason for that is basically that interest rates certainly impact the payment that you make. If you had a $200,000 home that you wanted to buy, and you're buying it at now 4.75%, just to make my numbers easy in my head, that's $525. That's maybe $1,000 if you borrow 95% of the money. That's $1,000 a month. And a year ago, that would have been $820 a month. So there's a huge difference of, gee, $80. Doesn't really make a difference to that household in any profound way. The other reason it really doesn't make a difference in any profound way, in any what we call existential way, meaning existential would be, well, gee, that family doesn't get a house because the interest rate went up, or the deal collapses and cannot go through because the interest rate went up. So there's no existential consequence, or very, Very rare is there an existential consequence to the rate going from 3 3/4 to 4 3/4 on a $200,000 house. Just doesn't happen. It's $80. The other reason that there's not a great deal of impact is because our housing market for folks who are coming here as primary residents is an outstanding ladder, what's called a ladder market. There are houses available, condominiums available in the low 100s, $110,000, $120,000. There are homes available starting at 150, 160. There's homes at then 200, at 250, at 300, at 350, at 400. So there's a ladder within the market. If the $80 bothers you, then you buy a house that's $20,000 less expensive. And you're back to the same place again. So instead of buying a $220,000 house, you buy a $200,000 house. Because the ladder exists, because our market happens to be very well supplied with housing from not only local builders, but regional builders and also national home builders. Because it's very, very well supplied market, it does a great job of fitting folks in at almost any price point. The net effect of a housing market that has that kind of flexibility in it, combined with the flexibility of the price points, combined with the fact that 4 3/4 is still actually, on a historic basis, a pretty low interest rate. When you wrap that all together, our market so far has not really noticed the increase in interest rates much at all. Now, the other half of the story is our real estate market is composed of people who are not currently primary residents, who are baby boomers and beyond, who are coming here to retire, hopefully 6 months down the road, 3 years down the road, 5 years down the road. They are the influx, the blood the blood source, red blood source of the Hilton Head economy, which is retirees bringing a lifelong's hard work and savings to the community to retire here. Hilton Head has that market. Bluffton also has that market, exhibited by Berkeley Hall and Hampton Hall and Belfair and Colleton. Hilton Head is very much that kind of a real estate market. All of those folks are noticing the interest rates to a greater extent than the primary resident, live here, work here group that of first-time home buyers in 150, 200, 250, and second-time home buyers up to 450, 500. The move here to retire folks, or the people who are planning on retiring here, are really noticing the increase in interest rates more. At least they're more concerned about it, because as my partner in Money Matters, Emily Johnson, is concerned with every day. Emily's a financial advisor and a financial consultant to those very people, and their main concern is taking the results of a lifelong's hard work in the form of an investment account and measuring their cash flow successfully so that they can lead a life and live out their years in it with a degree of freedom and comfort, and with as little worry as possible. So they're watching like hawks when they look at a $700,000 Hampton Lake house or a $600,000 Hampton Lake house. They're noticing very much the $300 difference in purchase in cash flow between last summer and this summer. So they're starting to watch more carefully. I wanted to just sort of give everybody a little bit of focus and give you an overview as to how it actually plays on the ground, how these big issues play on the ground. That's all today from me, David Crowell, Mortgage Network, and this concludes this segment of Money Matters.